Our single best chart, we do this with Kenneth Rogoff of Harvard. How can we link in the markets into Professor Rogoff's economics? Let's try the Nasdaq 100, inflation adjusted. Here is the boom. A big deal here to see this curve on a log axis. All you need to know is that's a mathematical metaphor for the enthusiasm, maybe Schiller's irrational exuberance of the late 1990s. And Ken Rogoff, a much more stable ascent here. Is this a central bank ascent? Is this a Janet Yellen tech rally that we've seen?
All right, well, there's a bit of that because interest rates are low.
But overplayed by the media?
Well, I think a lot of it is the tech sector is growing, and it's a dynamic sector. But a sort of concern I have is that part of it is that these firms that dominate the Nasdaq, that dominate the tech sector, are viewed as monopolies. They're going to be around forever. We didn't think that 10 or 15 years ago, and that's probably not good for productivity and innovation.
Well, you and I grew up in Rochester, and we've seen the destruction of those buildings up on Goodman Street that used to be called Kodak Park. I mean, all good monopolies come to an end, including the Eastman Kodak company. There seems to be a durability here in these tech stocks, as witnessed the Bloomberg Businessweek cover. But yet at the same time, as you say, all good things come to an end. Then how do you make policy off that technological creative destruction?
Well, the problem is they might not come to an end, that they maintain their monopoly, they buy up firms that might threaten them, even if it costs them a few $1 billion. And you don't get the next wave of innovation. They sit on their product. They try to milk it for as long as possible.